Good afternoon, everyone, and welcome to today's webinar on small business relief under UAE Corporate Tax. It is my pleasure to introduce myself as your host for today. I'm Karan Mutneja, Managing Partner at Prospective Tax Consulting. Joining me today is our senior partner, CA Jay Kumar Tejwani, who is an international and direct tax expert with over 27 years of experience. We also have two esteemed speakers with us today, CA Shashi Podar and CA Vaishnavi Raghuvanshi. Both of them carries extensive knowledge in the field of UAE corporate tax and will be sharing their expertise with us today. Did you know that SME sector in UAE accounts for over 94% of the total number of companies, with more than 500,000 businesses which are classified as small business or SMEs? It is clear that they play a crucial role in the country's economy. With an intention to reduce the tax burden of the newly introduced corporate tax on small businesses, the Ministry of Finance of UAE has introduced a small business relief. This relief initiative, which is driven by Article 21 of the Federal Law of Corporate Tax, followed by the ministerial decision number 73, and recently issued the first version of corporate tax guide on small business relief. Today, our esteemed panel of experts will be sharing their valuable insights and expertise on this matter. In today's webinar, we will be covering eligibility for small business relief, compliances on small business relief, losses, treatment of losses, participative exemption, and artificial separation. So before we proceed to the speakers round, I would like to invite our esteemed panelist, CA Jay Kumar Tejwani, to share his insights on the implications and importance of UAE corporate tax. Sir, over to you.
Thank you, Karan. Thank you for the nice words and beautiful introduction. So welcome everyone, and it's pleasure meeting you all on this great occasion. And in India, we are celebrating Janmashtami, and what else could be better day to have this webinar? So as we all know that corporate tax in UAE is introduced for the first time. It is basically a kind of a direct tax, profits or net earnings from a business activity which is carried out in UAE by the corporations and certain other entities. And the importance of the corporate tax introduction in UAE would be seen that it would help UAE in attaining the status as a leading commercial and investment destination. By adopting the taxation policies which are prevalent in the developed countries, UAE can offer great transparency and stability to the investors, and making it, in fact, a very attractive place to do business. And the UAE corporate tax also is in compliance with the global tax standards in terms of promotion of transparency, and even in terms of introducing the provisions like transfer pricing, GAR, ESR in a very systematic, methodical method. Also, one of the very important objects of UAE corporate tax is to eliminate the harmful tax practices. So by introduction of transfer pricing, the concept of POEM, the corporate tax is trying to eliminate all such. And the implementation of corporate tax, to the best of our understanding, it will align with the UAE's efforts to diversify its economy and also reduce its reliance on the oil. Oil revenue, it constitutes very significant portion, but corporate tax is going to be a very, very major chunk of revenue now. And the government is going to invest the revenue earned in development of the infrastructure, healthcare, education, and other public service, which is need of any developed nation. The broader economic development, directly or indirectly, they benefit the small to medium-sized firms. And as Karan mentioned, over 90% of the corporations or non-corporations belong to this category. And of course, the objective of corporate CTA is to cement or to strengthen the position of UAE in the global market, and also to ensure that it is doing away with harmful tax practice by companies getting set up in UAE and taking benefit of the tax loop. And so these are all the importance. But in terms of implications, as today's topic is going to talk about, the 9% corporate tax could considerably impact the medium to small size companies. Their profitabilities, their availability of funds for expansion, investment, or other business activity. So UAE's Ministry of Finance, what Karan mentioned, very recently announced that businesses and individuals that generate the annual revenues of up to 83 million will be eligible to the benefit from small business tax relief. SBR in short, we call it. And this is available from the financial years, which have started from June 1, 2020. And the aim behind this is to support those 90% businesses, those small businesses that provide goods and services and operate within the UAE. So it is more about the resident-based companies or non-companies. So this is what is the topic for the day, and I hope we are going to be benefited by the speakers, are young and very, very knowledgeable speakers, Shashi and Vaishnavi. Thank you very much. Back to you, Karan.
Thank you so much, Yasser. So without further ado, let's turn our floor to our first speaker, Shashi Podar, who will be providing us with an overview of eligibility criteria and compliance requirement for small business relief. Over to you, Shashi.
Thanks, Karan. We will start with our introduction. So we all know that corporate tax law has been newly introduced in the United Arab Emirates. And with the introduction of any new law comes new challenges and plethora of interpretational issues. For that reason, up till 31st December 2026, small business relief has been provided to small businesses which are resident for the purpose of corporate taxes to ease their implementation. Now, we might have a question as to what a resident person is. So a resident person is broadly classified into three criteria. First is a natural person who conducts business or business activity in the UAE. So if you're a natural person not conducting any business or business activity in the UAE, then you will not be classified as a tax resident. Secondly is a juridical person who is incorporated or established or recognized in the UAE. Third one is a juridical person who is incorporated in a foreign jurisdiction having its place of effective management or its POEM in the UAE. So if a company is set up in the UAE, then it automatically gets classified as a tax resident. And if a company is set up outside UAE but has its effective management in UAE by way of key managerial decisions, then that company would also get classified as a tax resident in the UAE. So for these three people, small business relief has been provided. Moving on to the next slide, we will talk about the eligibility for small business relief. So small business relief has been granted to resident taxable person, and it can either be a natural person or a juridical person, as we have discussed before. The second criteria is that the revenue should not exceed 3 million dirhams in the relevant tax period as well as the previous tax periods. So not only in the current year, but also in the previous tax years where you were subject to corporate tax in the UAE, your revenue should not exceed 3 million dirhams. Now, there is a difference between revenue and taxable income. When we compute taxable income, the UAE corporate tax has given multiple benefits with respect to certain kinds of income like dividend income, which gets exempted when you're computing your taxable income. But when you're computing revenue for the purpose of small business relief, each type of income, be it dividend income or any income from your direct sales or any other income that you're receiving from sale of an asset or any scrap sales, would get included in your revenue criteria. Our third criteria is that your company should not be a member of a multinational group. Now, if you may ask what a multinational group is, so multinational group is a group of companies which are operating across international borders with an overall revenue of 3.15 billion dirhams and above, and they are required to comply with country by country or CBCR report. So if you're a member of an M&E group, then you automatically are disqualified from taking SPR relief. And the fourth criteria is that you should not be a qualified free zone person. In UAE corporate tax law, there is a concept of qualified free zone person. So if you are falling under any of the criteria and you opt for a qualified free zone person, where you are taking benefit of 0% tax rate for your qualifying income, then you cannot take benefit of small business relief. So these four are the eligibility criteria for you to take small business relief in the UAE. One very important note to be mentioned here is that small business relief will not be available if a person artificially separates their business into multiple entities and keeps each entity's revenue below the threshold of 3 million dirhams. If such artificial separation is identified by the FTA, then their income will be recomputed by the FTA, and that person would need to repay their unpaid corporate tax, and potential penalties would also arise. Moving on to the next slide. Now, small business relief offers multiple benefits. The first and foremost, most important benefit of small business relief is that you are relieved from calculating your taxable income. As we all must be aware, while computing taxable income, we have to refer to the UAE corporate tax law as to which expense is allowed, which expense is disallowed, and there are some expenses which are proportionately allowed and disallowed. There are some incomes which are specifically exempted. To save small companies from the hassle of computing their taxable income, small business relief assumes that your taxable income is zero. When your taxable income is zero, your corporate tax automatically becomes zero. So our second benefit is that there is no payment obligation of corporate taxes. The third benefit is that if you're availing small business relief, then you have to file a simplified tax return and not the full tax return. There is a specific tax return when you're availing small business relief. Our fourth important benefit is that you are allowed cash method for accounting your financial statements, and you get saved from accounting your financial statements under the accrual basis. Our fifth benefit is that there is no requirement of maintaining TP documentation, but your transactions with your related parties must be conducted at an arm's length basis. So moving on to the next slide, we will have some poll questions to understand small business relief. Our first question is, Mr. Raj operates a business in Dubai. He's a resident person for corporate tax purposes. He started trading on 1st January 2023, and his tax period ends on 31st December. Now, in the most recent tax period ending 31st December 2025, he derived revenue of 3 million dirhams. His previous revenue for the tax periods ending December 23 and 24 were 2.5 million and 3.5 million respectively. Can Mr. Raj opt for SPR relief? I would request Karan to open the poll so we can record answers.
So this is the first question which you have to answer. I would request everyone to answer only the first question. I think we'll end up.
Thank you for the voting. We see that 55% of you have responded with yes and 45% of you have responded with no. Our answer is that the person will not be eligible for small business relief. In the next slide, Mr. Raj will not be eligible to benefit from SPR because even though the current period revenue is within the threshold of 3 million dirhams, he has breached the revenue threshold during the previous period as his revenue was 3.5 million for 2024. And one of the most important criteria for claiming small business relief is that not only for your current year, your revenue should be below 3 million dirhams, but also for all the previous tax periods, it should not cross 3 million dirhams. We will move on to the next poll question. So, Quarter PT Limited is a Singapore incorporated company that has an office in Dubai, from which it assists its UAE-based clients. All the board meetings are held in Dubai office, and all the key management decisions of Quarter PT Limited is made in the Dubai office. This company derived an overall revenue of 10 million dirhams from its operations, which includes 2.5 million dirhams, which is attributable to its office in Dubai. Can Quarter PT Limited opt for SPR relief? I would request Karan to open the poll.
I would request everyone to answer question number 2. Only question number 2, please.
Thank you for the responses. So we have a mixed response on whether this is eligible or not eligible. So moving on to the next slide, we see that Quarter PT Limited has an overall revenue of 10 million dirhams from its operations. So it will not be eligible to benefit from SPR because Quarter PT Limited, even though it is set up outside UAE, it has its place of effective management in the UAE. So it will be considered as a tax resident of UAE. And as a company, if you're a tax resident of UAE, your global revenue is taken for computing the revenue threshold. So Quarter PT Limited will not be eligible to benefit from SPR. Moving on to the next case study, we will take up some case studies now. So Mr. Parth operates a business in UAE and India. Both the businesses are independent and not aligned with each other. He is a resident person for corporate tax purposes. His total revenue during the financial year 2024 is 2 million dirhams from UAE and 1.5 million dirhams from India. Can Mr. Parth opt for SPR relief? In this scenario, we see that Mr. Parth is a natural person whose business is independent and not aligned. So moving on to the next slide, we have mentioned that even though the businesses are completely independent, we will only take the revenue of UAE because it is a natural person. So for the total revenue for SPR purpose will be 2 million dirhams, and natural person should consider only his foreign income only if it is related to their taxable businesses in the UAE. Moving on to the next case law. Tax LLC operates a business in UAE and UK. Both the businesses are independent and not aligned with each other. Tax LLC is a resident person for corporate tax purposes. Its total revenue during financial year ending 31st December 2024 is 1 million from UAE and 3.5 million from UK. Can Tax LLC opt for SPR relief? So here, moving on to the next slide, Tax LLC is not eligible to benefit from SPR as its total revenue exceeds 3 million. Because in case of juridical person, as we had specified earlier, companies must include all of their income, their global income, so their foreign as well as UAE income would be considered when calculating their revenue for SPR purposes. Moving on to the next case, Maple LLC operates a business in the UAE. It is a resident person for corporate tax purposes. Its total revenue during financial year ending 31st December 2024 is 3.5 million dirhams, including VAT of 0.6 million dirhams. Can Maple LLC opt for SPR relief? Our answer is yes in the next slide. Maple LLC is eligible to benefit from SPR because the total revenue is below 3 million. The VAT charge should not be included in the calculation of revenue as it is an indirect tax. Our next case is Subway LLC is doing business in UAE from the last 25 years. Its revenue never exceeds 3 million. However, because of sudden increase in demand, it expects that for this year, the revenue will exceed 3 million dirhams. Can Subway LLC opt for SPR relief? Our answer is Subway LLC does not need to do anything different immediately. If its current year revenue does exceed 3 million dirhams, it will no longer be eligible for SPR. This is a test which needs to be done at the end of the tax period when you are filing your tax returns. At that time, you need to opt for SPR. And if you're not eligible, you don't opt for SPR. So we will again take up a poll question. Americana LLC is doing a business in US with a branch office conducting business in UAE. The revenue attributable to the PE in the UAE amounts to 2 million dirhams in the current year. Can Americana LLC opt for SPR relief? We will open the poll for this.
So you need to answer all the three, but you can ignore first and second question and we'll consider only the third answer.
Thank you for the responses. So we have received a 50-50 response for eligible and not eligible. So Americana LLC will not benefit from SPR because it is not available to the PE of Americana, as PE would not be considered as a tax resident person. PE, state source income, and income having nexus from the UAE gets considered under non-resident and not resident person. So SPR benefit will not be available for Americana. So these were our Q&A. Now we will move to the compliances for SPR. For the first and foremost compliance for SPR is that to claim it, you have to register for corporate tax with the FTA and acquire a tax registration number. Even though you do not end up paying corporate taxes, it is of utmost importance to register for corporate tax with the FTA. Second compliance is that SPR is an optional relief. It is not a mandatory relief, even though if you have a revenue below 3 million dirhams, you can get taxed as a normal person and not as an SPR if you elect to do so. So resident persons must elect for this relief in each taxable period. So if you have elected for it once, it does not mean that it will continue for the next year. You will have to elect for it for every year. Next important compliance is that SBR companies must maintain their records and documentation for 7 years to support any information which has been provided in their tax returns. Next important compliance is calculation of taxable income. If you're a normal person, you need to compute your taxable income. But if you have opted for SBR, you get exempted from computing your taxable income and your taxable income is automatically assumed to be zero. Next one is tax return. Every SBR person is required to file their returns. There is no exemption from filing returns, but the return gets simplified if you're opting for SBR and you do not have to file a full return, which a normal person would do. Another compliance is transfer pricing documentation. If you're a normal person having transactions with your related parties in UAE or outside UAE, you need to follow arm's length basis. Arm's length basis is applicable even for SBR, but you get exempted from maintaining transfer pricing documentation. So we understand that SBR offers a lot of benefits, but it does come with a lot of cons. I would hand over this session to Karan and request him to take this forward. Thank you.
Thank you so much, Shashi, for valuable insights. Now, in the interest of time, let's move next to our next speaker, Vaishnavi Raghuvanshi, who will provide us an overview on the treatment of losses under small business relief and participative exemption and artificial separation. Vaishnavi, over to you.
Thank you, sir. So as Shashi told you about the eligibility and the benefits that are provided to the small business relief, now there are some benefits which are taken from the person who are electing for the small business relief. The very first is losses. So any person who is opting for small business relief cannot accrue, utilize, or transfer any tax losses in the year in which they are electing for the small business relief. However, if they have any brought forward tax losses from the year when they were not elected for the small business relief, they can still carry forward those losses in the future tax periods if in the future tax period they will not opt for the small business relief. Now let's understand this case with the help of an example. Moving forward to the next slide. Fizzy LLC is a resident person that started trading from January 2024. Its financial statements states that the revenue is 2.5 million, cost is 3.5 million, and it results in the profit loss of 1.5 million. In this case, as Fizzy LLC is eligible to opt for small business relief because its revenue is below 3.5 million, if Fizzy LLC opt for small business relief, they cannot carry forward this 1.5 million loss in the future tax period. So here, Fizzy LLC can opt for small business relief or also for not opting for the small business relief. And in this case, if they will not opt for small business relief, they can carry forward this 1.5 million loss in the future tax period. Moving to the next slide. One more exemption that has taken from the person who is electing for small business relief is carry forward of non-deductible interest expense. Under UAE Corporate Tax, there is one clause that states that while computing the net taxable income, any business can deduct up to 30% of EBITDA of interest expenditure. So any interest expenditure which was not allowed previously can be carried forward for the next 10 tax periods. In case when the person is opting for small business relief, in that year they cannot carry forward the non-deductible interest expenditure. However, as we have seen in the previous slide of laws, the same applies to the interest deduction rule also. If they have any previously brought forward interest expenditure, they can still carry forward the same for the future tax period if they will not elect for the small business relief in the future tax period. Moving to the next slide. Transfer within a qualifying group. So under the UAE Corporate Tax, one exemption is allowed for the person to transfer the assets within the qualifying group. That says that if any entity transfer any assets or liabilities within the qualifying group, so that will be treated as transfer at book value and not at market value. If the transfer is at book value, there will be no less and no loss or profit and hence no capital gain. However, in the case, if the person is opting for a small business relief, this exemption will not be provided to them, and the transfer will be treated as transfer at market value, and hence they have to pay the capital gain. Let's analyze this condition with the help of an example. Beta Limited is 100% subsidiary of Alpha Limited, and Beta Limited transferred one vehicle to Alpha Limited for use in business. The net book value of vehicle is 80,000. In this case, Alpha Limited paid 1,50,000 dirhams to Beta Limited for transfer of that vehicle, and it resulted in the gain of 70,000. Now moving to the next slide, we will analyze this situation. In this case, Alpha Limited has two options, whether to opt for a small business relief or not opt for a small business relief. In first case, if Alpha Limited opt for a small business relief and its revenue is below 3.5 million, they don't have to pay any tax and there will be no taxable income. In this case, Beta Limited's own profit is 2 million as well as the capital gain of 0.7 million from the transfer of vehicle. The total taxable income will be 2.7 million and it results in the tax payable of 0.209 million. So if Alpha Limited is electing for a small business relief, the whole group has to pay the tax of 0.209 million. There is one more scenario where Alpha Limited can choose to not elect for a small business relief. In this case, they have to pay the 9% tax on their profit, that will be 0.011 million. And Beta Limited will got exemption from the capital gain as the vehicle will be treated as transfer at book value. So they have to pay tax only on 2 million, that is 0.146 million. So if Alpha Limited is not electing for small business relief, the tax payable by the group as a whole will be 0.157 million, which is lower than the before. So while opting for the small business relief, it is very important to do the cost benefit analysis as whether it is beneficial for us or not. Moving to the next slide. There is a concept of tax group in the UAE Corporate Tax where the entities can join and will be treated as a single taxable person. Now, by calculating the eligible revenue of 3 million, if in case of tax group, the revenue will be calculated as a whole and not as a single entity. So while choosing the eligibility of tax group, we have to see this 3 million revenue as a whole for the whole tax group. Moving to the next slide. There is a concept of participation exemption in UAE Corporate Tax, which says that if you are eligible for this exemption, any dividend and capital gain received from the entity will be exempt. One of the very important conditions while opting for participation exemption is that the juridical person should be subject to corporate tax at the rate of at least 9%. As we have seen in the previous slides, that if a person is opting for a small business relief, they have to pay 0% tax. So now here, the big question is, if any person is investing in an entity and that entity is choosing to elect for a small business relief, will that person will get the participative exemption or not? Moving to the next slide. The answer is yes. In this case, the person or the entity who are choosing for the small business relief will be treated as subject to corporate tax. As we can see with the help of an example, ABC Limited is eligible for a small business relief, and here we are assuming that ABC Limited is fulfilling all the conditions, so they have to pay 0% tax. There is one more entity, DEF Limited, that hold 25% in ABC Limited. Now, if any dividend is received to DEF Limited from ABC Limited, it will be treated as participation exemption? The answer is yes, because in this case, ABC Limited will be treated as subject to corporate tax and DEF Limited can get that exemption. Moving to the next slide.
Vaishnavi, your voice is coming low. We have received message, so I would request you can keep your mic on.
Yeah, so am I audible properly now?
Yeah. Please.
Yeah. Now, as we have seen that the criteria for benefit from the small business relief, that our revenue should not exceed 3 million. So there can be artificial separation of business where the person or the entity can artificially separate themselves to keep their revenue below 3 million and opt for the small business relief. So here FTA comes up with a concept that is artificial separation, and if FTA determines that the business has artificially separated its activity to keep its overall revenue below 3 million, they will not be eligible for small business relief. Now the question is as how a person or an entity can artificially separate themselves. There can be a functional separation with the different functions for different businesses. There can be a geographical separation where the person can choose to do a separate business for different location. And there can be a temporal separation where a business can opt for different businesses at different person and different types. These are some examples where we can say that artificial separation can be formed. Now, moving to the next slide, there are some indicators which says that it can be a artificial separation. So while computing that whether any business is artificially separating themselves or not, we can ask some question and see that whether there is any financial links, like does the entities are financially support each other, or whether one entity is financially viable without the support of the other. There can also be economic links that says that whether the entities are mutually benefit from each other, or do the entities have the same group of customer. There can also be organizational and structural links where we can see that whether the entities are using same premises or same equipment, whether one or the several managers are effectively managing both the entities, whether same employees working for both the entities, whether entities jointly advertising each other's business, or one more important question can be formed here, that would customer know that they are dealing with two different business entities. So now the concept of artificial separation is completely new and based on the assumptions that whether the business is artificial separate or not. We can have some example to form that whether it can be artificial separation or not. Moving to the next slide for an example. Now let's take an example. Delightful Dates, a well-established bakery chain, has multiple stores across Dubai. On March 1st, another bakery by name of Bites Bakery LLC enters into the franchise agreement with Delightful Dates. This arrangement allowed Bite Bakeries to open a bakery under the same brand name of Delightful Dates in Abu Dhabi. The franchise agreement between these two entities says that Bite Bakery gained the right to use exact same branding of Delightful Dates. However, all the marketing and promotional activities would be managed only by the Delightful Dates. And the agreement mandated that Bite Bakeries exclusively source all its baking ingredients and supplies from Delightful Dates. And one more important thing here is customers are not aware that the businesses are separately owned. Here we can have one question for all of you, that this is an artificial separation of Delightful Dates. So I would like Karan sir to please open the poll for this. So you can answer that whether this will be treated as artificial separation for corporate tax purpose or not. You may have to answer both the questions. You can ignore the second one. We will consider the first answer. Now, as we have seen that there is 58% of people who are saying, yes, this is an artificial separation, and 42% of you are saying that, no, this is not an artificial separation. So it's interesting question. Now, moving to the answer is no, this is not an artificial separation, because while computing whether it is an artificial separation or not, we have to see the intention behind the contract. So here we can say that the intention is valid commercial motive, and the franchise agreements are very genuine arrangement which business owners use to expand their income without undertaking additional activity or forming a new business. The requirement for the franchise owner to carry out the marketing and provide all the ingredients are very common clause that is used in all the franchise agreement. So while computing and while answering that whether it is artificial separation or not, the very main motive we have to see is intention of business. Moving to the next slide, we have one more interesting case for you all. On 1st January 2025, Aparna established Muffin LLC in UAE. She is the sole employee of that entity. On 1st March 2025, it generates sales worth rupees 2.8 million. On the same day, they deregistered themselves for the purpose of corporate tax, and in its final return, they opt for small business relief as their revenue is below 3 million. On the very second day, that is the 2nd March 2025, Aparna incorporate a new entity named Cupcakes LLC, which provides identical services to the same clients as Muffin LLC. Aparna remained the sole employee of Cupcake LLC. On 6 September 2025, they achieved sales amounting to 2.75 million, and they deregistered themselves for the corporate tax purpose and ending up choosing a small business relief. On the next day, 7 September 2025, Aparna established again a new entity named as Cakes LLC. Aparna continued to be the sole employee of Cake LLC and provide identical services to the same client as previously served by the Muffin LLC and Cupcake LLC. Now, the big question is this is an artificial separation of business? Moving to the next slide to give you the answer of this. As we can see, the intention of Aparna is to artificially separate the business to keep the revenue below 3 million. Yes, the answer is yes. It will be treated as artificial separation, and it will be treated as temporal artificial separation, as all the businesses are providing identical services managing by the same person, and the intention is to attain the corporate tax advantage. In this scenario, the total revenue will be sum of all the businesses, and then we have to see that whether they are eligible for the small business relief or not. With this, I would like to conclude our webinar, conclude my findings on the webinar of small business relief. As we have seen the pros and cons of the small business relief, it is very important to elect for the small business relief while doing the cost benefit analysis. One more very important things that we have to keep in mind that it is an optional relief and not the mandatory relief. So even though your business is below 3 million, until and unless you elect for the small business relief, there will be no exemption provided to you. If you are a tax group, the 3 million limit will be for the tax group as a whole and not to the single entity. With this, I would like to hand over the webinar to the Karan sir to move ahead.
Thank you so much, Vaishnavi, for the valuable insights and covering it through a practical examples, which definitely must have helped our audience to understand the concept better. So before we move to Q&A session, I would request all the audience to take a moment and scan this QR code and join our WhatsApp community, where we share all the updates and examples related to UAE taxation. So the link for this is also shared in the chat box. You can even click there and join from there as well. Thank you so much for your participation, and we look forward to having you as a part of our ThinkTech's WhatsApp group. Now, let's take it forward to Q&A session, and we'll keep the Q&A question and answers window open for all the participants. They can put their questions, and we are happy to answer here. So I'll take up the first question. For the companies registered in Dubai Free Zone, are they liable to pay corporate tax? So maybe I'll put it across to Jesser first. Maybe you wish to answer, or maybe Vaishnavi or Shashi, whoever wants to take up this. Yeah, please, Vaishnavi, you can take.
So the answer of this is yes. Corporate tax is applicable to the free zone person. However, some exemptions are provided to the qualified free zone persons. If you are satisfying all the conditions to be a qualified free zone person, you will be eligible for the 0% tax rates. But there are certain conditions that you need to fulfill before getting the exemptions. I hope I made it clear.
Thank you. Thank you so much, Vaishnavi. Jesser, you were, I think, raising hand in between to add on something. So I'll open window.
No, I think it got covered. Very beautiful and wonderful presentation by Vaishnavi and Shashi.
Thank you. So there's one more question. Yeah. Is this small business relief will be available every year if the company generate below 3 million every year?
So may I answer it?
Yeah, please go ahead.
Yeah, so yes, the answer of this, Abdul, is yes, it will be applicable till December 2026 as of now, as taken by the FTA. However, you have to elect it for every year. Each taxable period, you need to elect for small business relief, and then you will get the exemption.
Okay, Pratik, I'll share the WhatsApp group again, WhatsApp link again. You can scan this. Yeah. So Arjun is asking, for the first year 2024, will they consider the revenue of 3 million of 2023?
So, hi Arjun, the answer of it is corporate tax is not applicable in this year, and the revenue will be considered only for those years in which the corporate tax is applicable. So you have to see the revenue from your first taxable period.
So that means for 2024, if it's your first taxable period, then you have to see the 2024 revenue. And while you will be filing your return, you have to opt for SBR, or you may not opt for SBR. So next question is from Ms. Maisa. Is there a criteria to evaluate our entity that it can be eligible for SBR?
So, yes, ma'am, there is the criteria, as there are some criteria. You should be a resident person and your revenue should be below 3 million. You should not be a qualified free zone person, and not of country by country reporting is applicable to us. So there are certain criteria as discussed previously. If you are fulfilling all the criteria, yes, you can opt for small business relief.
Next question is, and also from when it is compulsory to register for corporate tax?
So the answer for this is you have to register from the very first year, that is after your first financial year after 2023, you have to register yourself. Now the taxable income or the tax payable will be 1-to-1, but registration is compulsory.
The registrations are open from 1st June 2023 onwards. It is yet open. I think other than natural person, for all the juridical person and even free zone person, it is open. So you can go and get yourself registered. Revenue is calculated after subtracting cost. salaries and commission paid?
No. So answer of this is no. Revenue is your gross revenue, your gross sales or any other revenue you are receiving by selling of maybe a vehicle, maybe a machinery, dividend. So that is your revenue. Revenue is sales figure and not the profit figure.
Fine. So it includes your direct as well as indirect income, right? Next is registration process same even for SBR?
So the answer of it is yes. Registration process is same for everyone. Whatever difference you will make at the time of filing the return, but the registration will be same for person, small business relief also.
Sorry for that. So just to add on, Naman, every company should take registration now. It is at the time of filing of return that you have to, while filing, you have to elect whether you are falling under the SBR or not. So registration process is same and it's open for everyone other than the natural person. Prateek is coming up with currently open for joint stock company and private shareholding companies or all companies. So as we mentioned, Prateek, yes, it's open for all the companies. Registrations are open for all the juridical persons, including free zone persons, but not for natural persons. We are still waiting for that. Mr. Sayed is asking, what is the corporate tax applicable percentage on business earning above 3 million? Is there any income slab on corporate tax revenue?
So shall I answer this? Yeah. So the corporate tax rate will be 9%, Sayed. Above 3,75,000, whatever your profit will be, the rate is flat 9% as there is no slab provided in UAE corporate tax. Yes.
Where can we get the format of the return? Will the FTA provide it, or should we get a consultancy firm to do it? So, yeah.
So the format for filing the return is not yet provided by the FTA. It may be, we are also awaiting the format in which we need to file the return.
Just to add on, there will be definitely an online filing, but for that, you have to prepare your computation of return. The way we do in other countries, we compute our taxes because all the law and regulations are there. So preparing the computation of return and assessing the tax is your responsibility. The only thing is be on the online portal, you will go and file your return. I think the way we do in VAT returns as well. So for that, you may need a consultancy support. So revenue is the money earned by company throughout the year in simple terms.
Yes, so in simple terms, we can say that any amount which is received to the entity will be considered as revenue, not earned, because earned can be termed as profit. You should not subtract your cost from that. Any amount you are receiving will be treated as revenue for 3 million purpose.
Yeah, so that means any of the revenue which is accrued during the year, which is a part of our profit and loss account, right, on the income side. Ritik is asking, if someone has chosen wrong entity type while registering for corporate tax, then can it be amended later on? So maybe this is something not very related to SBR. We'll answer this to you separately. If one person is tax group, is qualified free zone person, and others are not, then SBR is not applicable. It's a question if one person in the tax group is a qualified free zone person and others are not.
So Naman, qualified free zone person cannot form tax group. So if you are qualified free zone person, you cannot be the part of tax group. So I think the answer is clear to you.
So I'll move to the next. Okay, so I could see there are a lot of questions coming across.
Yes.
Maybe I would request audience that we will definitely answer that separately. And yeah, I think let's first conclude this session. And to conclude, I would request CA Deepak Kakkar to please come and deliver the vote of thanks. And let me just see just. So Deepak, over to you. I would request you to please come, and we appreciate your presence today. Please.
Yeah, am I audible?
Yes, 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 you are.
Yeah, so thank you, Karan, for this wonderful webinar and arranging this webinar. And thank you, Jai sir, for your wonderful opening remarks on the UAE corporate tax. I would also like to thank all the distinguished uh, speakers for sharing your knowledge and expertise on this important topic in this UAE corporate tax, that is small business relief, in terms of its applicability, its time limits, that is uh, threshold limits, as well with the case studies. And last but not least, I would also like to thank all the participants who have joined today from different corners of the world. And your participation has made this webinar very enriching and wonderful experience. Thanks to all of you.
Thank you so much. So we'll still continue to answer the questions that has been raised. So yeah, Jay sir, I would also request to see some questions. We still can continue for 5 minutes and answer the questions the participants are putting.
Yeah, sure. So I would like to answer Ritik's question that if someone has chosen wrong entity type while registering, so Ritik, I think yes, there is amendment provision which is getting incorporated. This should be possible. And then Sandeep's question, any exemption on taxable income? So yeah, there is a threshold of 375,000, up to which there will be no taxation. And above this limit, there would be a tax of 9%. What are the requirements of maintaining books and support? So now this is something very interesting because with UAE corporate tax getting incorporated, the maintenance of books and accounts, they become of very, very primary importance because they would be subject to audit at some point in time. So there is a very strong requirement of maintaining books and the supporting.
It is required for retaining these books for 7 years.
Total of 8 years, so the year plus 7 more years.
I think we have answered most of the questions. Yeah. So thank you so much once again for joining in. Sandeep, you have raised your hand. I believe your question has been answered. So still, if you want to speak, let us know. You can again raise your hand. We'll open the window for you to speak. Perfect. Thank you so much. And the recording of the session will be emailed to you. Thank you so much.